right? The first thing we want to talk about is the anatomy of a trade, right? So the anatomy of a trade, what does it include, right? Well, it includes this: the entry, stop loss, take profit, partial profit, break even, idea invalidation, and the canceling of a trade. Now, most people will be saying, hey, I thought it's just the entry, stop loss, and take profit, right? What's all this extra stuff on, partial profit, break even, and what the heck is idea invalidation, right? Now, what I want to share with you is that when you take a trade, when you decide to take a trade, that is only the beginning. That is only the beginning of the journey, right? There's still so much more that can be accomplished, right? From it going from entry, moving a little bit to its stop loss, going close to a take profit, right? Every single step, there's a different story, there's a different plan, right? It's very cliche, I know, but there's this popular saying that if you fail to plan, you plan to fail. So when you're taking a trade, and you just have an entry, stop loss, and take profit, that is okay if your trade is maybe you're a scalper, you want to get in and out fast, 5 to 10 pips. There's not much room for partial profits and break even over there. But if you're like most traders, you take a trade and you hold it over a period of time, right? It is important that you know what are the different elements of a trade, right? Just to show you, and many of you guys have seen this before, we have a handy dandy little trade manager over here, right? And when you click something like whether we click buy or sell, right, you can see that we have an entry that we pick. Let's just say I want to I want to buy when price is down here. Where's my stop loss? I want to maybe put it all the way down here. My take profit all the way up here. Now, if my take profit is all the way up there, where's my second partial profit? Maybe I put it over here where price has been bouncing up a couple of times. I'll put my second partial profit there. Where's my first partial profit, right? I notice there's like this supply area over here, right? So I'm just going to put it here. I can see price tends to hover around this area quite a bit. Where's my break even? All right, break even, technically, if price breaks past this level, right, I don't mind moving my stop loss to break even. Idea invalidation, if price comes close enough to here, right, and I'm expecting it to bounce over here, but it doesn't bounce, right, then this is my maximum level, right? Maybe it is over here where the big breakout, you can see the big breakout happen over here, right? This is where my idea invalidation level is. Where's my trading stop loss? I don't want to use it. I'm going to close it off. And if my trade is not triggered, right? If my trade is not triggered and price crosses this level, I'm going to cancel it. How much am I going to risk on my trade? Am I going to risk a fixed lot size, or I'm going to risk a percentage of my equity? Maybe I'm going to risk 2.5% on this trade, and this is my lot size. That is the anatomy of a trade, right? You need to plan. You need to plan for every single movement, what's gonna happen and how you're gonna react to that moment, right? If you plan it perfectly, you should never need to worry. You should never even you shouldn't have a reason, or you shouldn't have too big a reason to check your phone that frequently, because you know that you already have a plan, and let the plan work itself out, right? If price reaches this area, right? If price reaches this area, you're going to close off a part of that position. If price reaches this area, you're going to, move your stop loss to break even. You move it to this area, right? You close off maybe another 1/3 of your position. And if price reaches this area, you close your trade off fully, right? So it's an amazing concept, right? It's an amazing concept, and importantly, it detaches you. It allows you to detach your emotions from the trade. Because if you are checking every time, and trust me, guys, I know you guys do this. I know you guys do this every time you go and look at your trade. You get a little, and you see whether it's in profit or in losses. You get a little bit excited, right? You'll be like, oh man, right? It's going towards profit. It's going, it's going towards my stop loss, right? You're letting your emotions get in the way. So this trade manager, or rather concept, not necessarily this trade manager, rather the concept of having the anatomy of a trade properly planned out helps you avoid these kind of situations, right? So yeah, we got some questions coming in from Stephen. Get more details on the subject that you are talking about each week. So so I know you guys are tuning in for this. Let me just delete this trade. You guys are just tuning in for this. If you go to webinars, you go to xctrader.com, education seminars, right? You guys can tune in and see what are the next few things you're talking about. Today, we're talking about break even and idea invalidation. And next few weeks, we're talking about really, really advanced trading strategy, right? Fibonacci retracements, Fibonacci extensions, correlations, right? And then we'll show you how, I actually put it in play with proper entry, stop loss, and take profit placement, right? And Randy asked, where do you get this EA such as this trade manager, right? Just very simply, you go to Google, search for MT4 trade manager, right? And number one result there, but Forex Army, you can see it over there, okay? Yeah, we run the Forex Army too, so yeah, we built the best trade manager. Anyway, not to digress too much, this is the anatomy of a trade. Now, what is before and beyond? Right. So before I dive into idea invalidation and break even placement, right? Both idea invalidation and break even has to do with stop loss and take profit, right? What I want to share with you here, I'm going to take up my handy dandy pen, right? Is that this forms the main tools you can play with: entry, stop loss, and take profit, right? The concept of partial profit, break even, idea invalidation, and canceling of a trade, right? These things at the bottom, they what they influence is they influence this stuff on top. Okay, so your break even essentially is moving your stop loss to entry. Your idea invalidation is essentially moving your take profit to entry. Your partial profit essentially is a variation of your take profit. And canceling trade just cancels out your trade, and it has to do with your entry. Okay, remember, on MT4, what you're playing around with is entry, stop loss, and take profit. Okay? But the partial profit, break even, idea and validation, canceling of trade are just key levels for you to watch out for, right? Anyway, um, I don't want to digress too much. We always overshot on our time, right? So before and beyond. Now, I finally have drew this in a proper way. Let me explain it to you. Okay, after I just take a sip of my chrysanthemum tea. Okay, let me explain to you. I'm going to take out my handy dandy pen again. So let's just say you see a big resistance, right? You see a big resistance and you are looking to sell, right? You're looking to sell. We're looking to sell over here. Okay, we expect price to go all the way down. And this is our take profit, right? This is our take profit. This is our stop loss. And this is our take profit. Okay, now, what do I mean by before and beyond? Your stop loss always has to place beyond a key level, and your take profit is always placed before a key level. Now, what do I mean by key levels? Key levels can be defined in many different ways. You can use support resistance, you can use Fibonacci, you can use gun angles, you can use astrology, you can use whatever it is, right? Everyone has their own way of determining what how to get your how to define a key level. But however it is, right, we'll look at the most simple form, which is swing high resistance, right? So we got, if you see price react off this level once and this level a second time, our stop loss, right? We won't place our stop loss slightly below over here. Okay, we don't place our stop loss slightly below, we place it slightly above. Why do we place it slightly above, right? Prices tend to be attracted to these key areas. Whenever price gets attracted to a major resistance area, there is this area of where I call the bulls and bears are fighting, right? There are people, the bulls are trying to push it up. The bears are, the bears who think that, okay, price is reached this area, is going down again. There are a lot of people selling, right? So when you're placing a stop loss, right, try and assuming this is a sell order, right? Assuming this is a sell entry you're looking at, you always want to kind of put it slightly beyond this major resistance level. Okay, so it gives it a little bit of space to play around, and hopefully from there it would reverse. Okay, the opposite is true for take profit, right? Because when it comes to take profit, you notice that price has bounced off once, it bounced off twice, and it's bouncing off a third time, right? There's strong support level over here. Now, do you really, if you imagine, right, if price is coming all the way down, price is coming all the way down to here, and is reaching this major support, what do you think people are going to do? People are going to get excited, right? People are going to be like, I'm going to get in this trade. It's a very strong support level. They're going to start buying, and there's a high chance that they're from this area, a little bit above and a little bit below this key support area, you're going to see price bounce up. So if you place your take profit slightly beyond, right, if you place your take profit slightly beyond, there's a high chance that when price comes down to here, right, it doesn't even, it might have traveled 90% of the way, towards your take profit, but because you chose to place it just slightly beyond this key area, right, price instead bounces up and your take profit is not reached. And that is one of the primary reasons why many people complain that, oh my goodness, my broker, right, they're trading against me. It almost reached my take profit and it went in the other direction. And it almost reached my stop loss, it touched my stop loss and then it reversed. Right? The trick is to always to avoid that, you must think one step ahead of everyone else. Right? Everyone is going to look to sell here, everyone is going to look to buy here. Right? So if you're going to take profit, get out before the fight happens. Okay, get out before the fight happens. Now, what do you do when you're on the streets and you see a gang fight happening? What do you do? Right? If there's a gang fight happening, you stand your distance, right? You're like, oh my goodness, I better stay away from it. Right? This is exactly what I mean by that. Gang fights happen at these big areas of support and resistance, right? And if we're smart, we will stay away from it, right? If we see, we see it happening, right? We stand a distance from it. If we see it coming, right, now we can see we're traveling in this direction, and we see that a big gang is going to come out here. What we're going to do is we're going to get out of it. Get me the hell out of there before I get anywhere closer to the gang fight that is happening over here, right? So yeah, just basically remember, stop loss is beyond, take profit is before. Now, thank you for sitting through my amazing Picasso drawing. We got some questions coming in. We got a question from Randy. Oh yeah, Randy, for your question, right? Just navigate around the site. You should be able to see the full version. From Imad, would you place your stop loss a good amount above the point where price has reached the highest is reached reached upon temporary breaking through the software? Okay, Imad, I'll look at your question later. It looks a little bit confusing, right? If you can rephrase it again, I might I might better understand it, right? Stephen, you're asking, is it possible to take partial profit on a trade? Yes, you are able to. On MT4, it is not so native. What I mean by MT4 is not so native, right? Let's actually just go through this together. Let's just say, okay, I'm not with this. Okay, let's just say I'm doing, okay, here's my entry, here's my stop loss, here's my take profit. Okay, you right click on it and you can click close. Oh shit, sorry, I mean, just let me redo that. Entry, stop loss, take profit. right click and click modify. And you can click market execution. Okay. And then you can close your trade here, but you can also close, like if you want to close half of it, which is 1.6, right? Then you can, there you go. You can close 1.6 of it and you're left with half the position. So that is how you do it. You're not able to do, you can only do this on a live trade, right? You can't do this when you do a buy limit, right? And the terrible thing about MT4 is that you just need to put this stop loss and take profit placement so manually. Let me show you. You know what, forget it. I can't even trade with the standard MT4 thing. But yes, you can close a partial profit only on an open trade that you have. You cannot set a pending trade and close it in advance, which is why we kind of have this little trade manager, right? So it allows us to kind of set our trades in advance, right? Yes. So that is capable, but only with like some advanced trade management tools. Okay. What can one, so we got a question from Heighten. You know, what can one use to determine the major support and resistance levels, right? So one of the ways we do that is really by what we call graphical levels, right? If you see one big bounce over here, you see one big bounce over here, one big reaction over here. This is what we call a swing high resistance, right? One big bounce, no, two, three big bounce. This is called a nice swing low support. There are many ways you can use to determine it. I've went through a couple of lessons on support and resistance, pullback, overlap, stochastic, RSI. What if you're really interested? Tune in next week where we cover Fibonacci. That is my favorite topic, right? It's the toughest topic, but it's my favorite topic. Okay. Now, so we got another question. Guys, questions are good. We got a question from let me touch on Human's one first. What about putting stop loss 5 pips below and above resistance and support, right? So the danger of saying that let me go and put my stop loss 5 pips away, right? 5 pips above, right? Is, let's just take a look at this. Oh, sorry. Let's just take a look at this. Now, who can tell me what is my spread on euro dollar right now? You look at MT4, this is my spread. What does it mean? How many pips spread is this? Yeah, it's 1.2 pips, right? So if you're trading euro dollar and you put a 5 pip spread, right? 5 pip stop loss or 5 pip take profit, right? That gives you about 5 times your spread, right? But if you go down to something like, let's talk about some of the other crosses, right? One of the more famous crosses that people love to trade, let's just say it's pound cat, right? Pound cat is maybe 30. This is 3 pips, right? So a 5 pip stop loss is not a lot of space, right? If you trade something like where's the Kiwi yen? A Kiwi yen is still okay. Kiwi cat is 2 pips. You notice that every one of them has a slightly different a different spread. Some of them are wider, some of them are smaller, right? I'm just going through all of them, kind of not going to call out any of the setups here. Honestly, I'm pleasantly surprised that the spreads are pretty decent. They're actually really decent, right? Even on stuff like pound, euro pound, euro pound is 1.4 pips. Okay, it's not bad, right? Importantly, is that each one is different. It's not about placing a 5 pip stop loss or 5 pip a 5 pip difference, right? Yes, Ima is correct that it depends on the volatility of the currency pair. In very volatile times, you probably want to stay out of it. If you want to get a gauge, right, there's one tool that you can use. It's called the ATR indicator. It's the average true range. You can use a value of 14, and right over here, 0. If you can see my value on the right, 0.065, that is about 6.5 pips, right? So usually if you want to put your stop loss at a certain distance above or below a key level, right, you can use this to reference that. Okay, 6.5 pips tends to be about the average, right? Maybe, right, it goes up to 9 or 10 pips usually, right? I can see this, right? So maybe I put my stop loss 10 pips away, right? So the good thing about ATR, which means average true range indicator, right, is that it tells you the average it tells you the average true range, right? Man, this indicator is so descriptive. No matter what I say, it's average range, average true range. Yeah, that's basically what it does. It tells you how much price has been moving around recently, the average amount, right? So if you're going to put your stop loss or take profit slightly above that true range, right, that will give you a little bit of breathing space. Okay, but of course, the concept of break even and idea invalidation would help you better gauge on how to place this. Now, we have a question from Madbog, Mubdog, right? On whether I can use I guess yeah, I can use the chart to show you what I'm referring to, right? But there's not much of a difference to it, right? So if I were to identify a resistance level over here, right, I'll probably just highlight this area over here, right? This is a resistance level. So let's just say if this is a resistance, my stop loss would be slightly above this level, right? I won't put my stop loss over here. I won't put my stop loss over here, right? Because I can see that price went up once, went up 2 times, went up 3 times. So when price is approaching this area, what's going to happen? There's going to be a gang fight, right? People are going to fight over here. So when you're assuming that you're selling, I love this highlighter, so amazing, right? Assuming that you're selling, right, you're gonna put your stop loss slightly above this level, right? You don't put it in the middle of the gang fight, right? That's where everything happens, right? And if you were to put your take profit, I guess if you're selling from here, and let's just say that you have a support area over here, right? Price react, bounce, 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 right? Your take profit, you won't put it beyond this level, you put it before this level. Okay. Um, now okay, you know what? We're halfway through the webinar in terms of time, but not in terms of the content I want to cover for you guys. So just let me move on and touch on a few important stuff, guys. Okay. So what is break even, and how do we decide where to put your break even target? Now, look at my amazing drawing. All right, this took me almost half a day because I'm so bad at drawing. All right, so break even. Break even is a level where you are in profit. Okay, keyword, you are in profit, and you recognize that there is a risk of reversal. Risk of reversal where? Back to your entry. Back to your entry. Okay. It is basically you saying, if I am right, price should go all the way to my target. But if it goes back to my entry, I am wrong and I should get out. Now, this is a scenario of how that looks like, right? We place our entry over, this is the level, right? So I'm going to take out my the highlighter, right? You can see price, there was one big resistance, there was one big resistance over here, okay? Then after that, yeah, follow me through my story, okay? After that, we see one big swing high. We see a second big swing high. So what are we thinking of now? My mic just fell. All right, what are we thinking of now? Right, we see that there is a swing high resistance over here. We think our entry is that we will buy on the breakout, hoping for price to push to our take profit. Right, so price comes down here and it's coming up here and it breaks out. Okay, so the moment it breaks out, our take profit is over here. Right, this is our take profit, and this is our original stop loss line. Okay, we are hoping for price to come all the way up to here. Now, when price broke out, okay, where is our break even? And usually at the break even is where I would place my first partial profit. Why is that the case, right? So my break even, if I identified this level, right, can you see there's this big level that occurred? This big level that occurred, this would be a big resistance level, correct? I would put my break even slightly below it, or exactly where it is at. Why would I put my break even over there? The reason for that is that you see price, price kind of just moves around a bit, then it reaches this big resistance level. Okay, this is a big deciding point. right? There are those people who are all looking at this level over here and they are starting to sell, right? They're starting to fight, right? And anything can happen at this level, okay? But all I know is that when you reach this level, right, instead of trying to wait for, insisting I'm right and hoping that price goes all the way up to there, I would move my stop loss. I would move it all the way up to above my entry level. Right. So if this was my entry level, I'll put my stop loss slightly above it. Why slightly above it? Is because it's to protect our position and to cover the cost of commission. Right. So I'm going to put it slightly above my entry. All right. Now, if price from here, I'm going to change my pen color. I'm going to change my highlighter color. Oh, I can't change my highlighter color. Forget it. Right. If price goes all the way up to my take profit, that's amazing. But if price doesn't come out to my take profit and it comes down instead, right? And just say it goes around here, and my original idea, the one that I painted so beautifully in my mind, like a Picasso saying that I think that price will go up here. If it doesn't work out and it starts to reverse, right? That means my idea, I want to that my stop loss will get me out of the trade in case it goes all the way down. Because remember, at every stage of your trade, ask yourself, what am I expecting? Right? In this case, I was expecting a breakout and price to come all the way up to here. I'm just going to use my pen now. I think it's getting a little bit hard to see. I was expecting a breakout and for price to come to over here. Right? So price was hovering around here. And when it finally reached this level, I understood and I recognized that this is a big resistance level I should look out for, this level, right? It is important to assess your risk at every stage, right? I know that previously price was not able to break past this level. So now that it's at that level again, it will be foolish and ignorant of me to think that price would just reach this level and will casually walk all the way through to my take profit. I need to protect my risk. I have been right up to here. And if my strategy, maybe I have a combination of moving average, crossovers, and breakout trading and stuff like that. But if my strategy tells me that it's supposed to go all the way up to here, a lot of people only tend to see the upside. All they see about is the upside, right? They think that, okay, it's gonna come, and when this happens over here, they are so happily in profit, they don't consider the risk that it might just reverse all the way down, right? So you are right at this level, right? And what you need to do is to protect your position. That's why you move your stop loss above your entry, and that is how break even is decided, right? If I have to put it, if I put a rule to it, is that if you have a trading strategy, now let's just go into the charts or something, right? If I am, let's just say, okay, let's just say, if I am buying, let me just take up my highlighter. If this is my entry, okay, I'm buying over here, okay, my stop loss is over here. This is my stop loss, okay. This is my take profit. Okay, where I would put my partial profit, right? I would put my partial profit around here. I say I would put my partial profit and my break even around here. Now, why would I put my partial profit and break even around here? Oh man, what the heck happened? It's because if I am correct that I am buying from here and I'm expecting price to come up, once it reaches here, what can I acknowledge? That price had 1 time, 2 times, 3 times, 4 times. It has failed to break past this level. Okay? So when this happens, right, I even though I have dreams at night that my take profit will be reached, I need to recognize that there's a very real risk that price reaches this level and fails. and will come down again. And not only when it come down, for all you know, because it looks like it's making lower highs, it might come all the way down to my stop loss. So when price reaches this level, what happens is that my stop loss will be moved to my entry, right? So that protects me. And at the same time, once I take my break even, I will close out partial. I'll have a partial profit taken, because if I am right, partially, I should reward myself and close off part of my trade, right? So that is the concept around break even. Okay, you need to look for the next big level, right? If I have to put it very simply, your stop loss is over here, your take profit is over here, and your entry is over here, right? This is your entry. You need to find the level, the next big level between your entry and your take profit, right? You need to, if there's no level, that's great. But if there is a level, you need to very realistically recognize that and say that there's a high chance that, maybe there's a 70% chance that it might come all the way up to here. That's great. 70% chance it goes up to here. But never, nothing is as simple as that. Just because we want it to happen doesn't mean it will happen, right? So we must recognize that there's a 30% chance that it will reverse from there. And we need to be ready for that. Don't just look at the upside all the time, guys. You need to consider the downside, right? And many people refuse to consider this downside because they are in profit. That's the big danger of break even. They are making money. And when people are making money, they think that they have cracked the code to the matrix, right? They feel like they have solved, the world's greatest mystery. And when that happens, that's where complacency comes in, right? They feel that they don't need to recognize that I'm right this much, I might be wrong. They'll be thinking I'm right this much, and since I'm right this much, I'm going to be right all this way. So proper risk management advises you to consider that there is, even if there's a 10 or 20% probability that it's going to go down, you need to consider that, and please protect yourself. Okay. Now, if the trade, we got a question from Steven. If your trade passed your break even, would it be better to move your stop loss to a level to take a larger profit? So we have a question from Steven, right? It revolves around this this concept. If this is our entry, this is our take profit, this is our stop loss, right? And this is our break even, right? His question is, if price reaches your break even, right, does it make sense for your stop loss over here to be moved to that level, right? For your stop loss to be moved all the way to break even. Now, the problem with that is that you're not going to give your trade enough space to breathe, because what is likely to happen over here, where the level you identified, is that price will likely in most circumstances, when they're experiencing resistance, they're likely to go up and down. That's where the gang fight happens, right? And when that happens, there's up, there's down, there's up and down. If you move your stop loss too quickly and you move it right to, like, let me see if I can have yeah, if you move your stop loss all the way to here, right, you get taken out really fast, because at this stage, if you have bet your cards right, you have played your cards right, you're expecting your gang to win and for price to continue rising up. You must give them that space, right? So that stop loss, you need to put it at a distance away. You don't need to put it exactly at entry. You can put it and lock in a little bit more profits, but you need to give them a little bit of space to fight, right? That's kind of like follows a concept of trailing stop loss, right? Which we also have, right? Importantly, give them a little bit of space to fight. If they win, they continue going up to their profit. That's great. But if if the fight prolongs, just make sure that you are not affected by it. Okay, I mean, if the fight loses and you drop down from here, or it goes all the way down, yeah, you get to lock in a little bit more profit. So how tight you want to tighten your stop loss to your at the break even point, right? Depends on how big the fight you're forecasting it to be. Okay. Now we move on to we have a question from Iman. But could you show how to set this on using April with the chart you have on screen? Okay. Okay. Just really quickly, we have a question. When it comes to stop loss placement and ATR. Okay. Now, if you load an ATR indicator, right? This is your you can see that your is 6.5 pips. Okay, it's 6.5 pips. If your entry, let's just say that your entry is over here, right? You see that price bounce on time, right? And price is touching this level now. Price is touching this level now, right? So strictly speaking, on how to place a stop loss based on ATR, right? You expect that if you're playing a very small bounce from here, right? You're playing a very small bounce from here. You think that there's a higher probability that a bounce is going to happen than a drop, correct? You think there's a higher probability. Now, what is the stop loss and what is the take profit you're going to use? If you're playing based purely on like supply and demand, right, and you're just looking at the average true range, when price reaches this level, you should expect that it would go up or down in at least 6.5 pips, right? So I will put my take profit maybe at 6.5. I'll put my stop loss at 6.5, right? So you're just playing the small little deciding factor over here, the fight that is happening, right? And if how do you determine how big a fight actually happens at this stage? You determine it by knowing what the ATR is, right? So if you know the ATR, like at this level, look at this level over here. The ATR is at least like 12 or 14 pips, right? So at this stage, there was a big fight that was happening, a very, very big one, right? But at this stage over here, right, it looks like, yeah, like I mentioned, it's 6.5 pips. So there's a smaller fight that is happening over here. Okay, since there's a smaller fight that is happening and you just want to play the winner and the loser of the fight, right? If you just go slightly above or slightly below, right, then you can reference the ATR to kind of determine where you want to put your take profit and where you want to play your stop loss. Okay, now I haven't, just give me a second. I haven't really digressed too much into trading strategy. We'll talk about that in our next session. We have 15 minutes left, guys. Wow, time flies. And I haven't talked about idea invalidation. So let me share with you guys about idea invalidation, okay? And it's great to see that everyone is still with me. In fact, 100% of people are looking at the screen now. That's great, man. That's great. Exciting stuff. Now, idea invalidation. Are you ready for my amazing drawing? Okay. I'm going to go to idea invalidation. And this is what idea invalidation is. Okay, again, look at my amazing drawing. I need to explain it to you guys. Okay, how does idea invalidation work? Idea invalidation is usually placed before your stop loss. Okay, it's placed before your stop loss. It is the level which you basically admit, I am wrong. Let me get out ASAP, as soon as possible. That is what idea invalidation is. It is you having the humility to say that, oh shit, I am wrong. Get me out of this trade, right? And when this level is reached, your take profit is moved to your entry, giving you a small chance to get out at break even. Now, let me show you how this works. Okay, I'm just going to erase everything here. Now look at this. This is a big resistance level. Okay, this is a big resistance level, right? And we can see that our idea invalidation level is, if you can see in purple, it is slightly below this big resistance level. All right. Now, what happened ever since then is that price, react off one time, react off two times, right? And there's this resistance over here. And finally, price is working its way up to here. It touches this level, and we expect it to reverse, to drop from here. Correct? Our take profit, our original take profit is all the way down to here. You know, I always put my take profit slightly before, and my stop loss is slightly beyond, right? Remember our first topic, before and beyond. So our, we're adhering to that. But now we have an idea and validation level that is right at the that is right at the major resistance over here. This big little swing high that occurred over here. Now, price is supposed to drop down, according to the rules of Desmond, price is supposed to drop down. But price doesn't obey my rules because the market doesn't care what you think. The market only cares what it thinks, right? So even though I was so confident of that, price starts to come up over here. At this point, it might reverse again, right? But then it start coming up to here, all the way up to here. At this stage, I'm looking at it and I'm thinking, holy crap, it's going to hit my stop loss. If it hits my stop loss, I'm going to lose money. Now, that sucks, right? And it is important to ask yourself, what is happening? What is the market telling you? What is your original idea and what is happening, right? My original idea is this. My original idea is that price will come here and price will drop all the way to my take profit. It might not drop all the way. It might go up and down, up and down, up and down. But yes, it is supposed to reach my take profit. That is plan A. Plan B is that, let me just go and change the color of my pen to I guess purple. Plan B is that it doesn't drop all the way down, but instead, it comes all the way up. And it breaks this resistance level, which was my original plan. I was expecting price to, keep dropping from this resistance level. But clearly, it didn't work out. So price is working its way to my stop loss. Now, since I identified this as a big resistance level, that's saying that, okay, clearly this is a big level to watch out for. What is going to happen is I'm going to put my idea and validation level there. So when price reaches this level, my original take profit will be moved all the way up to here, to my modified take profit, right? This gives me a very, very small chance that when price reach this resistance level, there's a very small chance that price would reverse down. And you've seen it so many times, it's called a breakout pullback, right? It makes a pullback to the level where it broke out from, and then it takes off from there. And if we didn't get out of the trade here at break even, it would have rocketed and hit our stop loss, right? For all you know, you might be correct. Price reach here and it drops all the way down to here. Okay, now what is the what is my view on that? Okay, my view on that is very simple, right? If you expect price to drop from here to here, it is different. It is 100% different from price touching here and dropping down to here. Can you agree? This plan A over here is based on proper analysis, right? Resistance, maybe 100% extension. Yes, it's based on proper analysis. Now, what is plan B here? This is not based on proper analysis. It's based on proper praying. You are praying and you're praying that, oh God, please let price drop all the way. Right? It's not an analysis, right? You're just hoping that it works out because you know that your original idea is this. You're expecting price to touch this and go down. And if price breaks this level, you need to admit, look yourself in the mirror and say, man, I am wrong. I am wrong and I am trying to get out of the trade as soon as possible so that I can protect my trade, protect my losses, right? For all you know, price goes down all the way down to here and you'll be like, hallelujah, I've overcome the odds and I am, the heavens are with me, right? And you think that, okay, you hit your take profit or something, but that is by sheer luck. That is by sheer luck, sheer luck. and it has nothing to do with the analysis that you did, because your original analysis was that price would touch this level and price would drop all the way down to my profit level, right? So remember, that is the move, that is the trade that you're measuring. The stuff that happens here, you know, this thing here, this second move that happened that drops all the way down, that is by sheer luck, right? Unless you had planned for it to happen, right? Otherwise, what idea invalidation level tells you is that at this point, you're telling yourself, okay, get me out of the trade as soon as possible. Price comes down, closes off at your modified take profit, and you don't care what happens after that. You know, it might drop down, it might go up, you know, it might range, but you don't care, because all you need to care about is ensuring that you don't let your emotions come into play and let the probability work in your favor, right? You know that 9 out of 10 times, you know, price touches this level, it drops, right? But that doesn't mean that you can improve your profit factor a lot more. In that 1 out of 10 times where it breaks past this level, you know that you should, if you can cut yourself to break even, that would increase your profit factor a lot more. Let me explain that in a very, very simple drawing, right? You know, running out of time. Basically, if you have, if you're playing this kind of strategy, 6 out of 10 times, right, you're profitable. 4 out of 10 times, you're losing. 4 out of 10 times, you're losing, right? If you can remove this 4 out of 10 times, you can reduce it to 2 out of 10 times with idea invalidation, your profitability of this trade will just shoot up by a lot. It's not only about increasing your wins, it's about decreasing your losses. Okay? So don't be afraid. In fact, be addicted to finding ways to minimize losses. Everyone's always talking about maximizing gains. No one ever looks at minimizing losses. Okay? So, all right. Let me see. That is my my topic on break even and idea invalidation. Does anyone have any questions for me? Because it looks like we're amazingly we are going to hit the 1 hour again. Time flies, man. Time flies.